All right, we are live. Welcome to the Option Genius Show. My name is Alan Sama. I'm here with my best buddy, Matt D'Ambrosi. We are from Option Genius, where for the past 15 years we've been teaching individual investors how to extract income from the stock market in a pretty conservative manner. No matter really what the market's doing, up, down, sideways, we can still win. So Matt, what's going on? How you doing today?
I'm doing well. It's things are going well. Um, yeah, how are you?
Good, good. Yeah, today we're going to be talking about the markets. We're going to be talking about the shutdown. Trump's always in the news. Uh, and then we did have a pretty big event yesterday or the day before, last couple of days, really. Warren Buffett kind of retiring. So we're going to talk about that. And then we're going to talk about some of his best wisdom for investing, life, children, etc. And then we're going to go and do a recap of the November SmackDown. Today is the 12th of November, so we're about, one third of the way in, almost one half of the way in for the month. So we're going to check on see how that competition is doing. Um, but
And
first off,
there's some nice movement in that. I saw it earlier, so
the last couple of days
talk
we had
about.
some up days, down days. We had some big movers, so I'm
Right.
sure things have changed then there. Today market is kind of flat. S&P is up 10 points, which is 0.15%. Rut's basically flat. Dollar is basically flat. The Nasdaq is basically flat. The Dow is up 0.8%. Gold is up almost 2. VIX is at 17 and a half. So that's a little bit elevated, but that's still not in the normal range. Um, and so markets are kind of waiting for this evening, right? They're waiting for
Right.
the Congress and the government and President Trump to sign this new spending bill into place.
Yeah, we're on day 43 now.
Is it really day 43?
43, you believe that? Yeah,
And
43.
and yeah, it was like all for nothing.
All for nothing.
Literally all for nothing. I mean, this is to me, it's an embarrassment of governance. It's an embarrassment of our leadership, our politicians.
Mhm.
This is pathetic, really.
And it's
I
really garnering a lot of attention, especially, with traveling, right? We're getting to Thanksgiving travel. We're getting near there. It's just a mess around the country, and it brings the dysfunction, right, of the government kind of right in people's faces. So,
yeah, it's all, oh yeah, it's for healthcare, it's for healthcare, it's for healthcare. And then, oh yeah, forget the healthcare. Like what happened? It's ridiculous. So basically, right, it's been, like you said, 43 days. For those of you who have not been paying attention, it's been 43 days since the government shut down. Basically, they had to pass a spending bill to keep the government open and keep paying the bills. But the Democrats said, no, we are not going to pass any spending bill that does not have extensions for credits for Affordable Care Act, or basically Obamacare. Without those credits, Obamacare basically dies, right?
right.
The premiums for health insurance are going to go skyrocket. And like for me, I don't qualify for any subsidies for Obamacare. And our insurance premiums are so high, I decided, forget it. We don't have health insurance, you know?
Yeah,
Um,
I don't blame you. I really don't. It's
and,
crazy.
and so now a lot of people are going to be in the same boat as me. We're just not going to have health insurance. And so if somebody, like, at least, if something happens to me or my kids or whatever, we can afford it and we can pay, but other people that don't have health insurance and can't afford a big payment, what are they going to do? Well, the hospitals and whatnot and the government are going to be end up paying for this stuff. So it's either they pay for it one way or they pay for the other. But I'm not here to get into an argument about
We're
healthcare.
here to talk about trading.
Talk about trading, but I mean the thing that really pissed me off was, these so eight Democrats or seven and one independent decided to switch their votes and said, yes, we will vote for the spending bill. We'll say yes and we'll pass it. And up till now, they were saying no because we want the credits. But somehow the Republicans told them, hey, just vote yes. And, we promise you that we will vote on the credits sometime.
Right.
We'll vote on it. They don't have the votes. They weren't promised that it was going to pass. They weren't promised that President Trump would not veto it. They were not promised anything except for a vote, and yet they switched. So it was basically all for nothing because they're not going to get it.
No, I don't think so.
Obamacare is dead. They're not going to
Yeah.
get it.
Hmm.
And I was watching, one of the interviews with one of the senators, Sheen. I don't know what state she's from, but when they interviewed her and they're like, why are you doing this? And she goes, well, I was talking to one of my constituents, and he told me that he didn't have health care, but because he was able to get Obamacare, he actually went to the doctor, found out he had cancer, and it saved his life. Without Obamacare, he would never have gone to the doctor. He would not have gotten treatment. He wouldn't have been able to afford it. He would have died. And this is why we're fighting for these subsidies. And this is the same woman who switched.
Really? Oh, that's
Yes. The
that. Yeah.
same senator who switched. It's like, oh, yeah, now I don't care about that guy who could have died.
Like
Whatever.
what changed, right? That's
And,
that's
my opinion is they got bought. They were bought. They sold out and somebody paid them off. And they made a deal with them that, hey, we're going to give you this something. A couple of them are not up for reelection because they're retiring or whatnot. I don't know what I don't know all the details, but it's like, oh, hey, we're going to give you this really cushy job after you retire. We're going to take care of you or whatnot. And the other ones, we're going to help you win your reelection or something. I'm sure they got something.
for sure.
It wasn't, I mean, for
Why
them
would you
to,
why would you have a change of heart like that?
yeah,
Right?
it doesn't make any sense at all. So that's why I'm saying it's a total disgrace, like, but because of that, the government will probably reopen today. That's why the markets were up on Monday when we got the news.
We had
And
Veterans Day, right? So
yeah, we
this
had
is
Veterans Day yesterday. Markets were still open, but volume was not that high. And now, because the shutdown is going to be over, the news is going to start coming back out again, all the reports. And so the Fed should have some data for their December 10th meeting to decide whether to cut or not. Um, and most likely, again, we've talked about this. Most likely, they're going to cut again, and the markets will continue to go up until the end of the year. So, this was the one hurdle that we had to overcome. We did it in a pretty bad way, but it's been
the longest
done.
in history, but yes, it
Yeah,
is.
and so now the market is back on track to move higher. So I think that's where we're at now. So crazy. But and then also in terms of talking about politicians, Nancy Pelosi decided to retire.
She did, yep.
She did, and then they looked at her stock portfolio and her net worth, and since she was in office, she beat the Dow Jones average by
Yeah, she's the best trader of all
1,700%.
time.
1,700%. She made $130 million in the stock
With
market.
all that she does, she had the time to figure out to be the best trader that
Yeah,
you've ever seen.
yeah, it's amazing. She's multi-talented, man. Wow, $130 million while she was in office. Incredible. Ah, well. And then we had another retirement this week. Mr. Warren Buffett.
I know. This one brings a tear to my eye for sure.
Yeah, Uncle Warren, I mean, he's the one that he made investing approachable. A lot of people
Yeah.
see him and they're like, "Oh yeah, he's just a sweet old guy and he doesn't know much and he's not like some tech guru or day trading guy and he's just like, yeah, just buy the market when it's down and
You approach it like a garage sale, right? You're trying to find something of value and you're trying to get it at a discounted price,
yeah,
right?
yep.
So,
So, he wrote he stepped down from chairman of Berkshire, but he came out and said, I'm going to step out of the limelight. I'm going quiet, was what his words were. So I guess, fewer interviews and whatnot.
yeah, he
Um,
won't be doing his annual shareholder letter, but he will be doing a Thanksgiving letter that he tends to do every year. So he's still there, and he's got a lot of confidence in Greg Abel, I believe, that will be taken over. So
Hmm. Yeah, I did think that, it's going to take some time for Berkshire to actually start going up in price. I do think that there was a 20-30% Buffett premium because he was in the lead, he was in charge. Now
yeah,
that he is no longer there, as soon as he made the announcement, the stock has been just going down, right? Hasn't really done much. And I don't know if it's going to appreciate for several
it's a,
months.
that's a great question because I did have Berkshire and I sold it,
Hmm.
and for that reason, I think that it's kind of unknown with him leaving, although he does have a lot of confidence in this new guy. I think a lot of things will be the same, but the sentiment around that stock will be kind of muted. I think it'll chop sideways to down. I think for the immediate future until we get a lot of confidence in the new successor.
I
Yeah.
agree 100%. Yep. So, what I wanted to do was I made a little PowerPoint of Mr. Buffett's greatest hits. So let's go through those.
All right.
Give me a second. Let me share my screen. Ah, what happened? Okay. All right.
Right. See it.
Quotes from the famous Warren Buffett. It's gonna be sad when he passes, but I think he's in his 90s,
It's
right?
95. 95.
95. Wow. And he said, he did the we talked about the giving pledge and how everybody's supposed to give half their money away and all that. He kind of came back and he's like, yeah, I couldn't really figure that part out. He's like, I had some goals, but yeah, it didn't work out. So I'm gonna give most of my money to my kids, their foundations, and I'll let them handle it.
At the
Now,
end of the day, he can do whatever he wants,
yeah,
you know.
you do whatever he wants. But like, he's like, oh, I'm gonna give my kids because they got, they have experience now. And then his kids are all in their 70s.
Yeah, they should probably be pretty experienced by now.
I hope so. And I hope they have a succession plan in place because they don't have a lot of time to use that experience.
Boy, gotta get
Uh,
on it.
oh my. Yep. So now these are he's done a lot of quotes and a lot of things that have people have attributed to him that he hasn't said. But some of his famous quotes were, "Hey, I don't look to jump over 7 foot bars. I look around for 1 foot bars that I could step over."
Yep. So,
Um, yeah, go ahead.
no, I said that's a great one that he always talks about. So we're looking at, he talks about like in baseball, you're trying to hit singles, you're not trying to hit home runs, right? And I think this quote is indicative of that, right? He's trying to do things with certainty. He's trying to repeat that, be consistent. So there's a lot of nuggets in this quote.
Yeah, like you're looking for something simple to do, right? I'm not, I take a look at these people who try to manipulate Wall Street, and they try the traders and whatnot, and even the guys on the TV, like, oh, the PE ratio is too low, and the book value is overloaded, and the projections and their earnings estimates are XYZ, and it's like, man, that's all. How are you going to figure all that stuff out? It's like, oh, I want to sell a put. Okay. Is the stock going higher? Yes. Can I see that on the chart? Yes. Okay. Can I get a high probability put? Yeah. Okay. I got a 90% chance this stock, this probably this trade's gonna make money. Okay, I'll do that. Right? To me,
It's
that's
the
a
ki-
one
it's
foot
the
bar.
it's the KISS method right here, right?
Exactly. Kist,
Exactly.
kist, KIST. Keep it simple trading, I think.
Or keep it simple, stupid.
Well, I don't like calling people stupid. Keep it simple trading.
Yeah.
But still, it's like, this is in my favor. The thing is advancing the way I like it. It's not going to cause me a lot of stress, hopefully. And I think that's his mentality also, right?
Right.
So,
And I think people look at the stock market and they think it's very intimidating, right, for the newcomer.
mhm.
So in this quote, he just really simplifies trading at its best. I mean, don't try to overcomplicate things, right?
If you cannot explain your strategy to like a 10-year-old, then it's too complicated.
exactly.
I think, you know.
I
Uh,
agree with that. Mhm.
Unless it's like making tons of money, which most of them don't. So you try to get it more complicated, you overkill. Cool.
I agree.
All right. Next one. Know your circle of competence and stick with it.
Love this one. I love this one. I'm a firm believer in this quote, right? I think there's no better expert in your life about what you understand in the world around you. So there's certain things that I understand that I see every day that I like and I understand as another person wouldn't understand. So I think we kind of give that power away in some respect. We think that they're experts that know things better than we do. And I think that, we're all going through this life and we have the best understanding of what we interact with every day, right, in our lives. So that's
Mm-hmm.
kind of how I think
Yeah.
about this.
And we also talk about this when we're coming up with our individual watch lists. You know, what stocks am I going to be trading? Well, it's different for everybody because you have certain experience. I have different experience. I have certain, things that I enjoy looking at and paying attention to, and you have your own. And so everybody's watch list is different because of this, right? For myself, I like technology. I like learning about what's happening in the future and what stuff is coming down the pipeline. I do not pay attention to drugs and what
Right.
drugs are being developed
Mhm.
and, what drug companies are doing well. So I don't have drug companies on my watch list. I have
Right.
more tech companies and, but I know a lot about fast food because I eat a lot of fast food. And so I have a lot of restaurants and fast food companies on my watch list. And it might not work for somebody else who's all, maybe a vegan or a whole food or like a whole foods
Whole Foods, right.
customer. Yeah,
Or
they
whole
might,
paycheck, they call it.
yeah, they might, they don't have Burger King and McDonald's on their watch list. So everybody's different because you know, Peter Lynch said it years ago. He's like, trade what you know. And it makes sense.
Right. And you're going to be interested in what, that you like, right?
You
Things that
should
you
be.
like.
You should be.
Right.
Like we have people that come into they came into our oil program and they're like, well, I'm in the oil business. I was like, well, then you have
Yeah.
a bullseye, front row seat and you know exactly what's happening. So you have probably a better chance of making money because you already see it live.
Hmm.
There are people that work for very large companies and they know what's happening in the industry. You know, it's like, hey, I know my company's laying off people, even though their earnings are going up, but things are really bad under the surface and it's bad in the whole industry. Okay, well, then you know something that other people don't.
Right.
Even like these analysts, these stock market analysts, they don't know all this stuff. They do their best, but they don't use the products. They're not customers of the company. They don't work for the company. They don't see everything under the surface. Um, and so
Which I think is so crucially important to each person to really look at that, right? I
Yeah.
agree.
So when it comes to like insider trading, I think this is the best that we can get. Like if we have information from inside an industry because we're in the industry, that's the closest thing to inside information we're probably going to get. So,
I agree.
all right. Next, adapt to reality. Reality won't adapt to your risk tolerance. What do you think of that?
That's a good one.
A complicated one. Like,
Yeah.
we got to read that one a couple times. Like, what?
Yeah. I'm sitting here going,
And I think this what he's talking about here is like, you have to trade to the market you have. You have to
Yeah.
adapt to what's actually happening. You can't be like, okay, I'm going to do my iron condors every year for the next 20 years, even though the market's not good for them, you know? Or hey, I'm going to be bearish, even though the market's going up day after day after day, month after month. Um, the
Yeah.
market is, go ahead.
No, go ahead. Go ahead.
Yeah, the market is not going to do what you want it to do. You have to bend your trading style to the market and your risk tolerance. Like if things, we always say, hey, look, if things are going crazy in the market, for us, especially as option sellers, we can very quickly get to the sideline. We don't have to go through the hurricane, right?
Right.
Just get out and sit and wait till things calm down because that's the 1 foot bar when things are calm.
Right.
You're trading when there's a tsunami going on. That doesn't make a lot of sense. And when you go to the bank and you deposit your winnings, right? They're not going to ask you, oh, did you, was the VIX at 25 when you made this money or was the VIX at 4? They don't care.
No, they don't.
Money made is money made, and you want to make it as simple as possible.
I
So,
agree. I see a lot of this like don't be stubborn, right? You have to react to what's happening, right? And apply the strategies that you need to. So
yep.
yeah, agree.
All right. Next, we have decide what you would like your obituary to say and live that life.
Can't disagree with that one. Yep, it's
I tried doing that once, writing my obituary. It's like, oh yeah, Alan was a
did you?
great guy. It was
Seems so
sad.
somber.
It was very
Don't do
sad.
that.
No, there was that book, Stephen Covey, The Habits, Seven
Oh,
Habits.
yep.
It start with the end in mind and write your obituary. That's like the first exercise in the book. So it's like you got to start with the end. Like, what do you want? What do you want to accomplish in your life? And then you work towards it. So uh, I think what he's talking about here is more of, uh, you know, how people see you, not what you've accomplished, but how people, your reputation and whatnot. But I think it's a good one. And then we have here, honesty is a very expensive gift. Don't expect it from cheap people. I hadn't heard this one, but I was like, huh, this is interesting, especially when it comes to Wall Street, like or politicians. Don't
Mhm.
expect honesty from a lot of people.
Hard to come by for sure.
Very, very, yeah, very hard to come by.
Or what are
Um,
you doing when people are not watching, right? It's the same thing.
yeah, so it's like, and that's again, if you listen to, if you watch a show like Jim Cramer's Mad Money, right? He brings on the CEOs of the company, and we have never seen a CEO talk bad about their company.
Of
It's
course
like,
not. They are, and they are, I will add, they are masters when they have these interviews. They're master salespeople, right? So
yeah.
they're going to be, after you, if you just listen to the interview, you're like, oh yeah, I want to go out and buy the stock right away. What a great guy. But you have to go a lot deeper. I mean, for sure.
Mm-hmm. Yep. Talking heads, hard to believe, especially advertisers, marketers online. Oh my goodness. Um, my dad was telling me, my dad's in his 80s. He sits at home, he's online. Oh my goodness. He's like, "Oh, hey, that internet thing that Elon Musk is doing?" I'm like, "Yeah, they're going public." I'm like, really? I haven't heard about this. Starlink's going public? He's like, I don't know what it's called, but they're going public. I'm like, how do you know? Oh, the guy said it, the Althusser guy. And I'm like, oh no. You're
Yeah,
watching marketing, aren't you? You're watching those long documentaries
yeah.
selling you a newsletter, aren't you? And he's like, well, yeah, they were selling a newsletter, but they were selling it's going public in December. I'm like, they're making stuff up. It's all baloney. They don't know. They don't like Elon Musk doesn't know. You have to like register for this and you have to do this ahead of time. You can't just it's
There's so many of these things. I mean, it's one after the other, right?
yeah,
So
the marketing nonsense.
do
Yeah.
your homework, as they say.
Yep. All right. Next. Opportunities come infrequently. When it rains gold, put out the bucket, not the thimble.
Yep. Load up the truck, as they
Hmm.
say.
So this one I don't know if I agree with this one. I think opportunities are there all the time, especially as an option seller. I mean, we can go in there and if we're looking for a layup spread, we can find 100 of them every day. Now, not all of them are really good, but still we can find a bunch of them, right? And so I think his trading style is different from ours. So I would say, okay, if he's looking for the home run hit, yeah, they'd come once in a while. Like if you had bought Nvidia back when it was like $10 a share and you had
Mhm.
seen it, yes, that was a home run. If you had bought Bitcoin when it was like 20 cents, home run, got it. Um, but for us, if you're just generating income from the stock market, like I'm trying to do, there's too much opportunity. Like there's too many
Yeah,
trades.
it's
It's
all
like which,
around you. I think it's you're identifying that opportunity, right? That's the skill. I
yeah.
mean, is there the way we do it? We see it all the time, right? And then you start to get that experience. You see it over and over again, right? And you're like, okay. But I agree with you. It is there. It's all around us. That's what makes trading so dynamic.
So this one I don't really agree with. I think there's lots of opportunity, but I see from his point of view, I see what what he means. If you're buying companies, then yes, you don't want to buy every single company out there. All
That's his
right.
main thesis. So, he's looking for a huge discount on things, right? So he's talking about those huge opportunities, right?
Mm-hmm.
Those type of opportunities do come fairly rarely. I mean, infrequently, I would say.
Mm-hmm. Invest in a business that even a fool can run because someday a fool will. I agree with that one.
Yes.
Um,
Changing management, right, of a company. You can have a really good CEO and you can have a terrible CEO come in and just ruin the company. Um, so yeah, you need to really pay attention to these businesses. They're constantly fluid and they're constantly changing. So yeah.
yeah. Mm-hmm. And so that's why, for him, he's like, he stayed away from AI, he stayed away from tech and internet names and whatnot. And I think that was part of why he did that. Because eventually somebody that's not smart, like right now, right, Nvidia is doing well because Jensen Yang, I think that's his name.
Yeah. I'm always
He's
like Wang, Yang, yeah,
I don't know. He's
Wang.
leading he's leading the
Close enough.
charge, but if he gets hit by a bus tomorrow, oh, we got a problem.
Very possible, yeah.
Elon Musk, this Altman guy, the Zuckerberg, all these guys, all these companies are still led by the founders, and they are doing well because they're founder led. But as soon as that changes, look out below because if you take a look at, say, Microsoft, right, did great while Bill Gates was there. Then Bill Gates said, "I'm stepping down," and Ballmer took over as CEO. The stock did well, but as a company, they fell way behind.
Hmm.
And then they had to bring in a new CEO who since then has turned the company around. And now it's, you know, one of the most, probably, I think, the second largest company in shares in market cap size after Nvidia. So um, you have to be careful about that. All
Yep.
right. Next, don't follow the crowd as a strategy. You'll get crushed when the crowd turns. So
Yes,
this
that's
reminds me, this reminds me of, like, when option sellers make money sideways, up or down. But if it's going up and up and up, we get hurt when the market shifts on a dime, right? Or going down, 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 and it shifts on the dime going up. So um, right now we're in the middle of this AI mess, AI craziness, AI bubble, whatever you want to call it. Eventually people will start heading for the door, and things will crash pretty quickly. At that time is when Buffett says to get in. That's when you put the bucket out. Right now it's going up slowly, slowly. Don't, have your cash ready and buy when everything gets crushed.
he makes it very simple. He just said, okay, you'll know when that opportunity is there because it'll be all headlines across papers, the internet. Everyone's in a foul mood. You'll know when that opportunity is there. So, yeah, I mean, the consensus will be different.
All right. The investor of today does not profit from yesterday's growth. So this is something I think a lot of newbies do not understand. For example, oh, hey, I see a Starbucks on every corner. I think I'm going to go buy Starbucks because it's got to go up. Well, no, it's already built in. The reason a stock will go up is because of what's going to happen in the future, of what money they're going to increase and make more in the future, not what they've already made.
Right. We're paying
So
for future growth.
be
Yep.
very careful of that. Next, why diversification is only required when investors do not understand what they are doing.
Love that one.
Yeah.
Sometimes they call it diversification, right?
Yeah.
Just
hmm
spreading it around.
So, do you need to have 30 stocks in your portfolio? That's what they tell you. Oh, I like a lot of day traders, they have that thing, right? Where it's like, oh, don't put more than 2% of your account in any trade. Don't lose or something. Don't put it or don't lose. So, I mean, with that mentality, you have to have 50 trades on at a time. I don't know about you. I cannot handle 50 trades at a time,
No,
and,
no.
there's no way. So you have to be careful of, taking the rules from day trading and applying it to any other form of trading. Um, and definitely you can't do that with Warren Buffett, right? Warren Buffett is like, put the bucket out. What are you, 2%? Put the bucket out, catch the whole thing, take it all down. So yeah. Next, the best investment you can make is in yourself.
Fully believe it. Fully
Yeah,
believe it.
yeah.
Yep.
Especially if you're young, you know. Um,
Mhm. Take a
yeah,
chance.
at any age, I think. But especially if you're young, you got to learn. You got to know what's going on. Right now, things are changing so fast. I was watching an interview yesterday, um, where the guy was saying that kids nowadays, 18 to 25, their unemployment rate is so high, probably like 7, 8% right now, because people are not hiring because of AI.
Yeah. And I think that's just going to get worse.
He was he was like, hey, I invest in apartment, or not apartment, but office buildings. He was like a REIT owner. He's a public
Mhm.
company investing in office space, and he's like, I can lay off 15 people tomorrow and replace them with a chat bot that costs me $30 a month. Why am I going to hire anybody? Right? It doesn't make sense.
I don't.
um I was talking with a daycare owner yesterday, a local daycare owner, and they actually took a booth at the local university, University of Houston. They took a booth there at the career fair. And I was like, why are you wasting your time at a community career fair? I mean, as a daycare, you only pay like $12 an hour.
Right.
Who's going to be getting a college graduate degree and then come work for $12 an hour? He goes, we got 3 people. We
Wow.
hired 3 people at $12 an hour, college graduates. I couldn't believe it. I was like, oh
That's
my God.
tough. That is really, ugh.
Yeah. Whew.
Yeah. Where are we headed, right? That's,
Oh man. If past history was all there was to the game, the richest people would be librarians. I like this because I love the library. I love reading. I love it. So I was like, oh man, he's talking about me. He's like, oh, I should be richer. But no,
I
it's
think
not just history. It's
you got to be curious, right? I mean, it's all there, right? History is such a great teacher.
yeah. And a lot of students when they're learning, they're like, oh, I need to know more. I don't know enough. I don't know enough. I need to know more. No, you need to do more. You
Hmm.
need to take action. Not risky action, but start paper trading.
You
You
got
need
to
to
get in the game, all right? You can't wait forever, right?
yes.
For sure.
Yeah, if that's anything anybody takes away from it, it's like, just start. Start now.
And that's
Start now.
tough. I think that's tough for real conservative types, right? People want to do it. They want to be all correct about everything, but that's not how life works, right? You got to get in there and actually do it.
They want assurances. They want guarantees,
Right.
It's like, okay, if I sell a 90% probability option, I should win every time. No.
No.
I mean, even at 90%, you're still not guaranteed. You still have to watch it. You still have to take care of it. You still have to be able to ready to adjust it or get out if it goes against you because it can, you
Yep.
know? So
That's life.
our favorite holding period is forever.
Classic Warren Buffett, right?
Yes.
Hold
Yes.
forever.
I don't know if I agree with that one though. Things change.
Uh, they do. And it is an interesting quote as we have such a change in AI. So yeah, there is change, right? But
Yeah.
if you can hold, right, and you have that ability, most people do not, right? They can't just hold on to something and go through all the ups and downs and just continue to hold. That's a tough one for people to do, I think.
Well, I think, a part of this is not just the holding, but it's the compound effect of it,
Hmm.
right? If you're getting in and out, buying, selling, buying, selling, buying, selling, you're paying a lot in fees, you're paying a lot in time, you're not focused. If you hold something for a long time, it's compounding, right? One of the things that we teach is that when you get your dividend, do not use it.
Reapply,
Reinvest
reinvest it.
it in
Mhm.
stocks, in the same stock,
Yep.
right? Because there was that one book, uh, call again, the future for investors, right? Um, that one, if you haven't read it, the future for investors, you should take a look at it because it tells you basically how to beat the S&P 500, you know, and that one really, that book gives you proof behind this quote: "Our favorite holding period is forever." Um, and so yeah, I think one of the examples in the proof was where in the book was he asked you a question. He's like, okay, when IBM came out, right? IBM
I know
was,
where you're going with this one. Yep.
would you have done better if you had IBM or if you had done Standard Petroleum, which later became Exxon, and hold it for the next like 30 years? During the rise of the computer, the boom of the computer age, would you have done better with IBM or Exxon? You would have done better with
I know
Exxon.
the answer because I read the book.
Yeah, you would have done better with Exxon. And it's
Yep.
like mind blowing. Like, what are you talking about? It's like, yes, if
You're
you
like, no
had,
way. There's no way. And
yeah,
it's true. Yeah.
because they paid out dividends, you reinvested dividends, and it just grows and grows and grows. IBM did not pay a dividend. IBM took that money and reinvested it and bought other companies and this and that. And so it didn't do as well. So um, it's interesting. Jennifer's saying here, I think would say instead of holding forever, I might say try to wait for the story to change negatively. Maybe, yeah. If something is fundamentally different, then you need to move. You need to get out. Like we talked about,
Yeah, very true.
the
Yeah.
CEO of the company, Warren Buffett is out. Okay, I'm thinking about, I don't have any
Or the people
Berkshire.
around them, right, that are in the C-suite are selling too, right? In
Hmm.
conjunction with the CEO. Yeah, there could be a big problem,
Yeah.
right? So you don't want to hang around for that.
Well, if something happened, Elon Musk gets hit by a bus tomorrow. Sell everything. Sell everything. Sell Tesla. Short Tesla. It's going to zero. I assure you. Nobody's gonna be able to save it.
Or at least cut in half for sure.
Yeah. Sweet. Cool. All right. Next, we have the three most important words in investing are margin of safety.
Yep.
I like that. Margin of safety. It could be applied in different ways, right? For us, I think probably a profit would be a good way to switch those out. Um, but even when you're looking for a company to invest in, they have to have some kind of moat.
Moat's very important. Yep. And that's always changing too, right? The moat's either getting stronger or it's getting weaker, right? So you need to pay attention to those type of things.
Yeah. Like I see, I watch Shark Tank with the kids, and a lot of times these people come on and they're like, "Oh, I have this thing and I made this and I'm doing this and do that." And, the bald guy, he's like, "Well, there's nothing stopping anybody from knocking you off. There's nothing
Why should I
proprietary."
invest in your company, right?
Exactly. There's
Huh.
nothing proprietary about your company. What does that mean? That means I can go tomorrow and start a whole new company and compete with you and kill you.
A good one is Blockbuster. I mean, look how that changed.
They had a moat for a while. Their
For a
moat
while,
was
right?
their
But I
moat was that
mean,
they were everywhere. They had a
right.
moat.
But my point is that it doesn't stay static, right? The mode is always changing, right? So you gotta make sure you
Hmm.
have that.
It takes 20 years to build a reputation, 5 minutes to ruin it. If you think about that, you'll do things differently. Going back
Very
to your
applicable
go,
to today's social media. Yes.
going back to character, yeah. Yeah. It's funny nowadays, the stuff that kids post, like,
It's a digital footprint. I mean, it's going to be with them forever. You think about it.
yeah. Oh well. All right. Risk comes from not knowing what you're doing.
Agreed.
I agree with that one. A lot. Because it's, if you know what you're doing, any strategy can work.
Yeah, always.
If you don't know what you're doing, you can lose money on the same strategy on the same trade.
I always say like riding a bike, right? It's risky, right? If you don't know what you're doing and you haven't learned your boundaries, yeah, you're gonna fall off that bike. Same thing. Same thing. If you just go blindly into something and you don't know your guardrails, sure, there's a
Mm-hmm.
lot of risk in that.
Yep. Only buy something that you'd be perfectly happy to hold if the market shut down for 10 years. Now, in this one, I think it's, if I were to buy a stock. And these are the passive trading stocks that we talk about, the ones that are strong, be around for 100 years. Maybe they've already been around for 100 years. They're not momentum names or really high flyers. They just chug and make money.
Yeah, you'd be sad to sell them, right?
Hmm. The Costco, the Walmarts, the ones that are there. They might not be around for 100 years, but if the market shut down, the stock market shut down for 10 years, that they have good management, they're still growing, It's okay.
Yeah, and you're convicted in them, right? So
Hmm.
it goes back to that you understand them, that you are comfortable with the volatility of whatever they do. Um, then you'd be fine
Yeah.
owning that for 10 years, for sure.
All right. Here's a big one. Be fearful when others are greedy, and greedy when others are fearful.
Right. When you see this, everyone's like, yeah, of course, but it's hard to do
Oh,
it. Yeah.
I can't do this. I cannot do. I am not. Yeah, I can put it on my wall. I can tattoo this on my body, but I still will not be able to do this.
Why do you say that?
I don't, because I've seen myself, you know, like,
Yeah.
for whatever reason, um, one of our rules is, hey, if you want to sell a naked put, you sell it on a down day. Um, and I usually do the opposite, a lot of times. If I see something dropping 2, 3 days in a row, I get scared. I'm like, oh, okay. When I see it going up, I'm like, oh yeah, okay, time to sell naked put. It's just,
I'm, I've been into this one a little bit. I've started feeling, over the years, it's almost like I see it as opportunity. I
when it
do.
goes down.
Yeah. hmm Which is
Yeah.
kind of like a whole Warren Buffett, Charlie Munger. It's kind of at the basis of who they are, right? If you simply look and you're going for a garage sale, yeah, and you're convicted in something and you really enjoy it and you've done your research, then you're kind of like, yeah.
Yeah. I mean, if you're only playing with like 5 names, maybe
Mhm.
10 names, then yes, you could do that. It's like, oh, hey, it's cheaper than before. I can get it now. Wonderful. I love it. But some of the stuff that, sometimes when we're trading, I'm not really sure, I don't know. It's not like I have trades on in companies now that I don't know if I would want to own for 10 years. And
Right.
so when I see it going down, I get spooked, you know?
Also, I know it's going a little off track, but it's a little different, I think, than how it used to be, right? I mean, we are going you could argue we're going to this AI future, right? Is this something you're going to want to hold on for 10 years? Maybe so. Um,
I
I
don't
don't,
think a lot of these companies will be around in 10 years.
I don't think so either. I think they're going to, they're going to compete. They're going to knock each other's moats out. It's going to be a lot of that, right? So,
They're going to buy each other. They're going to put each other out of business. Some of them are going to make money. Some will never make money, and they'll stop getting investors and they'll go out. There's a lot of things going to happen, and we've talked. Like I've done other things about this where people, someone like a Jim Rogers, right? He's been saying this for years that the next time there is a major economic slowdown, recession, drop, it's going to be very, very, very bad. Now, Ray Dalio is saying the same thing. Why is that? Well, because every country in the world right now has more debt than they've ever had in history before.
yeah, it's just not the US. It's around the world for sure.
Yeah. When we had the financial crisis, China did not have any debt. And they did bail out the US by buying treasuries at that time. But now China also has lots and lots of debt. And I don't think they're going to be buying treasuries to bail us out this time. So,
No, that's the whole argument, right? We could talk for hours and hours about this, right? It's
yeah.
almost like there's a artificial put on the market in a way. It's always we know. I think most retail traders know or have a pretty good idea that there will be a bailout because that's all there's ever been, right? So
But if there is no, or there can't be, then look out below. And at
yeah,
that time, I would be freaking out. I would not be buying at that time. So, uh, yeah, even when we had COVID, right? On the way down, I was very scared to buy. But
so
then
abrupt too. I mean, it was like,
yeah,
right?
but then we saw the market bottom, and I waited and waited and waited, and then I didn't buy at the bottom. I bought when it was recovering, and
Right,
that's
because
when I.
you don't know where the bottom is. No one
Mm-mm,
does, right?
no. But I thought I played COVID really well, like for myself at least. And the way we advise people is like, yeah, this is time to get in. And
You did it in a way. You did
we
it.
called it, yeah, we called that one, but still, that's a good
I
one. And
also would say that it is tough on the other side of the token. It's tough to trim your positions, right? When people are greedy, it's tough for people to take some profits, I think.
yes, hmm,
That's right. Because there's that greedy nature. You want to keep seeing it go up and up and up, and I don't want to trim my positions, right? And be happy with my profits, right? So there is that tough part of the
yep,
equation too.
right. Because what happens, at least for me, it's like, okay, let's say I got 1,000 shares of something and it's going up and up, and I've made a profit. I'm thinking, okay, should I buy more or just leave the 1,000? I'm not thinking, oh, I should sell some. I'm like, hey, it's still going up. It's still going
Right.
up. Because let's
That's
say if I sell half and I'm like, oh, I made a profit, great. And then it keeps going higher and higher and higher. I'm not thinking about the profit I made. I'm thinking about how much I could have made. Oh,
right.
I could have made this much. I could have made this much. Oh my God, every day I'm going to be upset that I got out. And if it keeps
But
going higher and higher.
maybe the answer is what you just said. You trim half the position, right? You lock that in and you let the rest kind of
Yeah,
figure
but
it out.
you still are
It's still a medium though, right?
ah!
You're still dealing with those emotions,
And
but you need
if as a perfect trader, yes, that's what you would do. But none of us are perfect. None of us are unemotional, you know? So all right. And then this is another one. I don't know if I agree with this one. Rule number one, never lose money. Rule number two, never forget rule number one. I don't think there's any way you cannot lose money.
I was gonna say rule number three, yeah, you are gonna lose money. That's part of it, right? That's
Yeah.
part of it. It's how you lose. It's most important, I say.
Yeah. I mean, if it's, a structured loss, like, hey, I'm into this trade, I know what I'm doing, it makes sense, but I have a stop loss and I'm willing to lose this much, then you lose. Okay. But I don't think you have if you're waiting and waiting and waiting and waiting for the perfect thing, like sometimes Warren Buffett says, he's like, you wait for the perfect pitch. Well, I don't know. I don't
No,
have the
I think
patience.
you're gonna miss a lot of opportunities too, I think. I I don't know if that's I don't fully agree with this, right? Because of the
Well,
nature.
you were a big proponent in this one. You love
I
this
was,
one.
but you learn things along the way. I'm not fully entrenched in this, I would say.
Okay.
Because
All right.
yeah, you're gonna lose. You're gonna lose. I think it's how you lose is the most important, right? Did you stay to the rules that you put in? Did you how you losing is part of trading, right? How you lose is most important, right?
Hmm.
To stay consistent.
Yeah. I
Yeah,
think it's really like, it might not even be did you win or lose, but did you trade right?
right,
Did you play it properly? And if you did, then over time you'll win.
right,
But if you are willy-nilly, just, buying, selling without any rhyme reason, then even if you won, you can't duplicate it. You're
right.
going to end up losing. Um,
Agree. Very interesting.
all right, got some more here. This is the last slide. The market is a voting machine in the short term and a weighing machine in the long term.
Love that one.
Yeah.
Yep.
So you do have to think long term. Um, you know, put more money aside if you can and let it compound, let it grow. And this is why people think, oh, I need to make 60%, 70% a year. I'm like, no, you don't.
Mhm.
You can make 10, 15, 20% a year. And within 10 years, you have a very nice, sizable portfolio and income.
Yeah, you have to let compounding work in your favor, right?
Yep.
And to do that, you got to be in the market for a period of time. You know, more than likely you're just going short and you don't know what you're doing, you're going to lose. For sure. Yep.
You don't have to make the money back the same way you lost it. This took me a while to learn.
I'm reading that, but I'm like,
I put that for me. I was like, yep, if you lost it here, you don't have to make it back in the same way. So,
this is interesting. So this is one of his quotes. This
mhm,
is I've never seen this one.
yep. So, and at least for me, this applies because, it's like I lost money on a particular stock. I want to get it back from that stock. No,
That's
you
the
don't have to.
revenge trade. That's the one. Yeah. No.
Yep. I mean,
Yep.
find what's working, play that. Do not, Do not just force it. Don't make it harder than it needs to be.
Agree.
You can't produce a baby in 1 month by getting 9 women pregnant. There's another one about waiting, the waiting
Yeah,
game. It takes
absolutely.
time. I mean, even, like our club, it's a year program. Why? Because it takes a while to learn. I expect people in there will probably be in there for 2 or 3 years so that they learn all the nuances. So they learn everything they need to be able to trade. Can you learn it in 2 months? No, you just don't have the experience.
Right.
You have to
Mhm.
go through the ups and the downs, and that takes time. That might take a decade to actually live through a bear market, several corrections, a bull market, a sideways market. Somebody comes to me and says, "Oh, I have this strategy. It's doing great. Okay, I back tested it. Great. How long? Oh, yeah, 2 years. No,
Right. Yeah,
sorry.
you need that time.
You come back with 10 years, maybe I'll take a look at it. But if it's only been working for a year or 6 months, some people are like, oh, yeah, I've been doing great for 3 months. Like, whatever.
Oh, you have to see all those different situations, right? And the market's so interesting. Like, no, I always they always say like there is never a moment in the market that will ever be the same as it was. It's always changing, right? It's always different
Hmm.
in time. So it's, you know, that's true. That's true.
Yeah. I mean, if you don't want to even invest in or trade the market or do anything, and you just take your money and you put in an index fund, like he says, every month, put more money in, little by little by little by little, can you get wealthy? Yes. How
Yeah,
long will it take is a different story.
right. Are you going to go into your account and take it out? Are you going to put all those safeguards that we naturally have in our lives that we're going to be like, okay, if we see the money, we're going to take it out. Can
No,
you?
no, no. You got to leave
Right.
it. You got to leave
Yeah, you
it.
got to leave it. Right.
And it has to grow. And so, it's the game can be winnable. The game is winnable. It's set up to go up. Um, and along the way there are bumps. So, the only thing is like, hey, if you want to get there faster, then you got to take a different approach, which is
Mhm.
what we teach.
I agree.
So, and then the last one, if you don't find a way to make money while you sleep, you're going to work until you die. I
Very
think
good
that
one.
that's like the passive trading mantra. Right?
Yep,
It's
it
like,
is.
yes, I have my options making money, theta decay while I sleep.
Yep. Are you actively going out and working for that money? Can you passively make it, right? It's a totally different world.
Yep. Yep. I mean, when you can make by clicking a couple buttons what you make in a day, it changes your mindset. It's like, whoa, you know, like
Like, does this really exist? Yes, it does.
I
Yeah.
sold 3 options and I made $1,000. Like, yeah, you
Yeah,
just
I
gotta
love seeing the personally, I love seeing the light bulb go off in people when they realize that, right? It's something.
yeah, yeah. And then, so now in the club, one of the things that people have been saying is that, my goal is to quit my job and trade.
Mhm.
My goal is to quit my job and trade. And so now I'm like, okay, if that's their goal, that's what we got to get them. That's what we want. That's my goal
Mhm.
too. If that's their goal, that's my goal. How do we
It's
get them
it's
there?
really just a number. It's a number, right? Let's break it down to what it is, right?
Yeah.
It's just numbers.
It's numbers. We have the strategy, so we know how to do it. Now we just have to put in the other pieces. It's a math formula, right?
Mhm.
It's like we need this X. We got Y. We got to figure out the A and the B in the middle and
Right?
put it around so that it works out properly. And so that's all it is. So yeah. So I
And get
can't
your
wait.
mindset along with that, right? To psychologically do it.
Uh-huh. Yep.
I
And then you learn all the issues that you have with yourself. Like,
It
oh,
tells you everything.
I'm
I
too
think I,
greedy, or I'm too risk averse, or I don't have enough faith in myself, or I don't have enough faith in the market, or it's so much. That's
so interesting.
90%.
Trading will tell you a lot about yourself.
Yep.
Stuff that you wouldn't even think, right?
Yep. Yep. All right. So that's
Very
it
cool.
for Buffett
Those are good.
Nuggets.
You picked some ones that I did not see before. They're pretty interesting.
Yep. Yep.
Yeah.
So, we do owe him a lot, right? I didn't get involved in the market because of him, but I definitely did learn, and he did make it seem very approachable and doable. So
Yeah,
I
I think for
appreciate
the
that.
common person, which is very important, right? He
Yeah,
demystified Wall Street in a way
yeah,
for people.
yeah. So all right, now on to the SmackDown.
The SmackDown. All right. So we had a lot of movement in the SmackDown.
And for those of you who don't know, the SmackDown is our monthly challenge where people pick one underlying stock or ETF, and then we see who does the best at the end of the month, which has the best return, and then they get a secret surprise. So, looking at this, whoa, wow, what the heck is
Hmm.
Son?
Son.
Whoa, Son, what the heck is Son? So we got 45% in the lead. And then we got AGQ, Mr. Luttrell at 28%. And then we had our leader, which was Mark Strickland, is now coming in at 18.8%. After that, we got Parker Hannifin and Connor at 10%. And then Joby is also at 7. Uh, ROIV is at 6. Everybody else is negative.
ROIV is a very interesting chart. Probably look at that one. It's been nothing but very interesting.
Define interesting.
Just left to right, right? And just nothing but up, I would say.
Really?
Let's see. All right. Let's see what they are.
Well, recently, yeah. Once it started, like
Mhm.
on September, I think September the
Well,
2nd, it had a big day, and then since then it's been going up from about $12 to 21 now.
yeah.
Uh, and let's take a look. Do they actually do?
Covent Sciences.
It's a medical company,
Hmm.
so they're working. So they probably have something in trials that is doing good.
Let's see.
Cool.
And
All
Sans
right, but Son, yeah.
Biotherapeutics. That's what that is.
SONN. Yeah. Sonnet. I mean, the stock was higher. Now it's at 475. So looking at the chart, it's kind of going sideways, but it's made a big jump from when we started. So um,
Biotechnology.
biotechnology, another biotech company. Yeah, biotech companies are working well right now. You know, Eli Lilly is hitting an all-time high. Um, Other companies are doing well. Pfizer just bought some other company for $10 billion yesterday or the day before. Um, so biotech is doing well. All right. So Son is in the lead, Mr. Brandon Carter. But it could be anyone's game because if you can go up 45% in 10 days, you can also
You
go
can go
down
down
45% in 10
45%.
days.
That's for sure.
um,
I have to say that I checked this yesterday and it was a little bit different. So what a difference a day can make.
So in 12 days, we have Palantir negative, we have Nvidia negative, we have Bloom Energy negative, Facebook negative. So uh, some of the red hot industries are cooling off going into the end of the year.
Yep. Very interesting.
hmm Awesome. Cool beans. All right. So that's going on. We still have more than 2 weeks in the contest. So we'll see how that goes. And that's all I had for today. You have anything else, Matt?
No, I'm just sitting with some of those quotes that you laid out. Very interesting.
Yep. So we'll be back on Friday. And hopefully tonight the government shutdown will be over. If it is, I
Let's
don't
hope so.
know. I'm trying to figure out like, are we going to have a big update tomorrow in the market if
That's
they do a
it.
shutdown?
I feel like it's kind of been baked in
I think we
in a
had it
way.
on Monday, right? We had that big
Yeah.
update on Monday. I think that was it. I was expecting more today. We're still flat, S&P's up, no, basically zero.
I think it's
So
kind of telling that it is flat today, right? That it's kind of already out.
yeah.
My
I mean,
thinking.
the market didn't really go down because of the shutdown, and then it's not really going up. But gold has turned. That has one thing that I've seen. Gold really did not like the shutdown, and since then it has turned and it's moving back up again. So um, that's something to keep an eye on.
for sure.
I think that kind of means that, the gold market is looking for more cuts. Um, so we'll see what happens. But yeah.
Indeed.
All right, folks. Thank you for joining us for another episode. And if you are new to the channel, please like, subscribe, leave some comments, tell us how we did. And